Hello, everyone, and welcome to another backstage interview from the Metals Investor Forum. I'm Gwen Preston, and I'm joined right now by George Salamis. George, thanks for coming on for this extra conversation.
Gwen, great to be back.
Let's start by talking about the conversations that you have been having over the last 3 weeks. So about 3 weeks ago, you put out this pre-feasibility study, super important document, especially for permitting. You need to be able to advance this asset, and the PFS is key to that. So that was part of the timing rationale there. The market reaction wasn't great, and that's a complicated ball of wax. What I wanted to ask you is the conversations that you've had since. What have you learned? What are you taking forward from here? Let's talk about that.
Sure thing. So I guess what we learned, lessons learned, one, the market's really averse to any announcements regarding future capital needs, full stop. So, the market seems to be hyper-focused on exploration results still, whatever market is still there. Focused on exploration results and doesn't want to hear anything to do with capital expenditures even 2, 3, 4 years out that are required to develop mines. That's pretty clear. So the message is, explore, keep drilling, but don't spend money and don't tell us about capital needs. That was pretty clear to us. Yeah, that was one of the messages. I guess too, as well, some of the feedback that we heard, Gwen, was the fact that investors really like the heap leach aspect of the DeLamar project. As you recall from the presentation I gave at your conference, there are two stages, or there's two ways to go with this project. You can go it alone with a heap leach, or you can do a heap leach scenario and then transition into a milling scenario for a longer mine life. The market seemed to really pick up on the heap leach aspect and the heap leach economics of the DeLamar project, which are really good.
Yeah.
They weren't particularly crazy about the concept of milling. And I think that has to do with big mills are expensive, they're tough to permit, et cetera. So the question that we had a lot over the last couple of weeks was, do we really need to build a mill into the sort of future development strategy? The direct answer is absolutely not. No, we don't. The heap leach is an excellent project on its own right. If you look at currently the combined project, which is heap leaching and milling, if you factor in sort of current gold and silver prices, it has an NPV 5 of about $600 odd million US and an IRR of like close to 40%. 2/3 of that value is really driven by the heap leach alone.
Yeah.
And so that's the message, which is, we don't need to build a big mill, and we can move that, just kick that decision to build the mill down the road, or even not do it at all, and we still have a very economic project on our hands. That's for sure.
And I mean then that leads to two sides of questioning now. One is about the heap leach, and then the other is about why the mill. Let's continue with why the mill just for a moment. Sure. And one of the answers I would say for that came out just the other day, since we had our conference, where you put out a high grade intercept that was deeper from the Sullivan Gulch area, which is the kind of mineralization that would require a mill. So the mill is almost more of a forward-looking concept as opposed to a value now concept.
That's correct. And there's some, I believe, some element of confusion in the minds of investors with respect to that. Not just with our story, with many other sort of issuers out there, which is, we really don't care about mills when it comes to high grade. And that's essentially what we put out this past week. And we've been trying to demonstrate in the context of Florida Mountain. That style of mineralization will require some form of milling, but people don't seem to care about milling when it comes to high grade. I think that's probably the message there. And as witnessed by what we put out this past week, we definitely have high grade elsewhere apart from Florida Mountain.
Right. So if you can demonstrate that there's a more significant body of high grade there, then perhaps the sentiment around this milling concept would shift.
Correct.
I gotcha. Okay. Yep. And then the other side of the questioning then is the oxide component. So the oxide, the heap leach operation is, like you say, it's a fantastic operation in terms of scale, in terms of recoveries and costs. It's a really great operation. Its weakest link is certainly its mine life. So let's talk about what opportunities you see at the project as a whole to address that.
Yeah, so spot on there in terms of some of the feedback that we heard from some of our investors as well, which was we really like the oxide and transitional material, aka the heap leachable resource and reserve that you put out. That looks really good. So the question for us was, please tell us where we can find more heap leachable resource, even if it's in 100,000 ounce increments. Close to where we have planned infrastructure, that could make a big difference. And they're absolutely right. We've done the equation, we've done the math. Mm-hmm. Adding, bits and pieces of, 100 to 300,000 ounces of heap leachable, let's call it resource for now, to the equation adds mine life, right? It takes the mine life, beyond 7 or 8 years to closer to 10. So the question is, where do we find that? So we've got in view, these what I'm going to call extensions of bulk tonnage low grade oxide material, which clearly require following up. Another thing we don't talk about a lot because it's hard for us to talk about in the context of 43-101. There's a lot of waste material from the previous mine that was operated by Kinross for the better part of 20 years, which is sitting there on site. A lot of the open pits that were there were backfilled with a lot of this waste material as well. Mm-hmm. And so if you look at a volumetric calculation of that and you make a few grade assumptions with respect to what their cutoffs were in the past, their milling cutoffs were in the past, essentially what they left behind in this waste, quickly figure out that the average grade of this material is probably pretty close to the average grade of the oxide and transitional material that we've included in the study. And how many ounces of gold and silver are there? We're in the process of doing a sort of a rough back of the envelope estimate of that. Our estimate is sort of 200,000-300,000 ounces of that material alone is sitting there, and it's oxidized and it's sitting there on the surface. Probably won't require crushing. And so what would that look like, for example, if you looked at a run of mine scenario with respect to the heap leach? And we'll have answers for that in the months to come, but that's looking pretty good as well.
Yeah, that's a cool opportunity. I mean, that's precisely what you need. And if you say it's sitting there sort of broken, I was about to say broken rock on surface. I mean, that's like a gift, right? If that all plays out. So now you have to do percussion drilling or whatever to try and prove that up, right?
That's right. And so we're costing that out now, as a matter of fact. We're looking at what it would take to take some of that material, of which we already know something about it because we've had to drill through some of that backfill and some of those open pits to get to the rock to quantify the resource and reserve. And we sample that backfill material. And yes, it does consistently run sort of 0.4 to 0.6 grams. So that could be some pretty good low hanging fruit, I think, for the project.
Huh, cool. Okay.
Yeah.
So that the priorities shift slightly. I mean, they shift and they don't going forward for Integra from here, right? You always knew what it was that you were doing. You put the PFS out so that you could advance permitting because that's, the foundational thing that needs to happen. Otherwise the asset loses its immediacy. And in the meantime, and while that's happening, you keep adding value through resources. And there's a little bit of a shift in what that looks like now, but onwards and upwards.
Onwards and upwards, correct. And then there's the shift, obviously, back to high grade exploration, which is typically within the sulfide portions of these ore deposits. But we put out some news yesterday, which we thought was pretty exciting.
Right, and this is we're used to seeing high grade at Florida Mountain, but this was not at Florida Mountain.
Right, so it's Sullivan Gulch, which is a pretty massive ore body on its own at the DeLamar deposit proper. It's got a strike length of about 1 kilometer. It's 100 to some cases 250, 300 meters wide. So it's a really large bulk tonnage low grade gold silver deposit, one of a bunch of them. But as we know, or we've proven, and you've seen this in other projects before with these low sulfidation epithermal systems, in addition to these bulk tonnage low grade zones, sometimes you get these high grade what we call feeder systems, which are part and parcel of the overall epithermal system. And so we think we've identified another one at Sullivan Gulch with these results that we put out yesterday, which were quite spectacular.
Fantastic. Well, you got a lot on your plate now. You just added another thing that you need to chase up amongst all the targets that you have at the project.
Another thing is quite correct. One of the interesting parts about this, Gwen, was the targeting of what we saw in yesterday's news release, which showed the highest grades of gold and silver at DeLamar that we've ever announced, it was based off of a theory from our exploration team on the ground in Idaho, basically targeting, jogs, changes in the overall structural orientation of the system. And so they were purposely targeting one of these jogs that, up until recently, we knew that there was bulk tonnage low grade in that vicinity. We didn't know that the high grade was there until we targeted it, and they got exactly what they were looking for. So that now becomes the model that we're going to be following. In fact, that's what we're drilling right now.
Cool. I love the iterative nature of exploration, right? And when it works, it's very satisfying.
It sure does when it works. Wait, what's the term? 60% of the time it works all the time.
So, yeah, that sounds about right. Cool. Well, thanks for the catch up, and good luck with all of the things.